Hey guys, Doug the Retirement Guy. We got a great video today of ULTY, the Yield Max Ultra Option Income Strategy ETF. Now, we know that's been a very, very popular piece on definitely on our channel, and we're going to try to keep you guys up to date on what's happening with ULTY. Before we get into that, I want to say thank you to all of our Patreon supporters and definitely all of our subscribers. You guys are phenomenal. We are almost to 10,000 subscribers on the channel, and we are growing to that 100 mark in the Patreon. So if you're not a subscriber, join the community. Hit that button, get notified every time we put a video out, because all we're trying to do is help grow your pocketbook. And if you want to support the channel, go down in the description and hit that subscribe button or hit that Patreon button and join that community there. But today we're going to get into the Yield Max ULTY. It's posting a 79.08% dividend, and let's get into it. So ULTY is Yield Max Ultra Options Income Strategy. This is a unique one. I first got to say this is going to be a high degree of risk investing into this program, but we believe we have found the point where it's going to be safe for people. But we do have to tell you up front that this is a high degree risk. One of the things ULTY does is they try to find covered calls, and they've also started doing covered puts strategies on US listed securities. So they're trying to get the reward of the positive growth and then also of the negative growth of certain funds and stocks. Their distribution rate 78.08, their 30-day SEC yield is 0, but their expense fees have gone up. This was a 0.99% originally, it is now up to 1.14%. And we definitely see that as increased, and we see that dropping from the distribution. So just kind of a key to the whole thing is that they are aggressively doing a lot of different things, but you're giving it a reward because of the risk. When we look at the holdings that they're doing currently, this is only a snapshot of what they actually have. We went with the top, basically we'll call it the top 10 that we have out there. But what you look at is AMD. They're putting put calls out there for AMD. They're doing the call options on the APP, the Apple side of it. So they're all over the place trying to follow the marketplace and trends of what's going on. If it's stocks going up, they're jumping in with the calls. If they got a stock that they feel is going to come down, they're going to boom the puts. They're really trying to watch the volatility of this marketplace, which is what makes it the risk that we talk about. And we'll cover more things a little bit later of how we think we found that this is a great time to buy into it and get yourself secured. So why ULTY? Why would we want to be in this in the first place? Well, of course, it's going to be the advertised returns of 79.08%. So you could take, again, $10,000 and put it into this, and a year later have hopefully your $10,000 plus another $7,900 on top of it. So you're getting real close to almost doubling your money in 12 months. So you always remember the 79.08% is a return on a specific time period and likely includes both the income of dividends, interest, and capital gains. Now, this will give you an enhanced exposure into a mix of US securities. So we can't sit here and say you're going to be all into Apple or you're going to be all into Tesla. What you're going to be into is a mix of all US securities. What they're finding and their system selling them is going up, down, sideways. But the powerful combination of ULTY that gives you some growth in the stock and the weekly paying income are very strong pieces of the puzzle. And when we talk about weekly dividend income, there's two things you can always do with that. You can take the regular cash flow, which is what we like here on the channel. We like that regular cash flow every week. Get that like a paycheck, pay your bills, do what you want to do, go live life. The other side of it is you can take and reinvest the potential of that weekly payout and buy either more stocks of ULTY, buy into something else that you want to be into, and help this grow your portfolio as a whole. So we take a look at the return of ULTY in 1 year. And right off the bat, this fund started in February 28th of 2024. So we're well over a year already. Realistically, we're a year and 5 months into this. So we look at this now, and this is when I first started looking at this, when I said this is a scam. This is not what we want. This is not what you want in retirement, because the thing is losing, losing, losing. And I think a lot of people talked about it, and we've seen blogs about it, that ULTY is just a NAV eraser. Throw your money into it and have nothing left when you're done. And they were probably right back then, because when we look at this, the 1 year return is down 54%. So you've lost half your funds. Year to date, they're only down 30%. 6 months, they're down 32%. And the past month, they're up 1.78%. When we look at our chart, as you can see, just going back 12 months, this thing was just below about 13, right around $13 a share. And then it just slowly up and down, rocky road, as I call it. It's a rocky road, up and down, up and down, up and down, all the way through, all the way till we got to the April tariff kick in. So the March Madness and the April tariffs kick in, and that's when we seen it almost what I call hit rock bottom. From that point, it has been on a slow, steady, I call growth and stabilization. You look how long this one has been stable. Even with the stock market going up crazily, this one has stayed right where it's at, being very stable. Now, most people would say that's a bad thing. I look at this and saying this is a very, very good thing, is because they found their niche. They found their pocket. They found where they belong, and this is where we're at. You can see at the timing of this video, it's $6.28 a share. Okay. So it's really, and we can go back all the way to May. You'll see it stays right in that number, or that $6 range. So we believe we found the bottom, and we found, we don't know where the top is. Hopefully it's back up to $15, but we know where the bottom's at. We know where we're sitting at, and we're very comfortable with. When we look at this a little more dialed in, a little more detail, we go to the 30-day action. What's happened in 30 days? And this almost proves exactly what I just said, that this thing was just below $6.20 back at the beginning of June. Dropped down to $6.10. So even though it looks like a big mark, we're really only going 10 cents down. But it sprung back up the very next day, back above 620. And then it's bounced anywhere below, just a hair under that 620, 618, all the way up now to 628. When we look at this 1 day, it's up 0.89%. 5 days, it's down 0.48%, a half a percentage point in a week. And then it's up 30 days of 1.78%. So it tells us that the fund is actually trying to grow. It is trying to make some legs to get moving forward. When you take a look at the 30-day average, $6.20 is the actual average. You go out 90 days, it's $6.24. So why do we do that? Because what we're looking at on this one is 30 and 60 days. If they are so close to each other, that means for 90 days, which is almost 3 months, the average of the fund is staying where it's at today. That would tell you zero growth. Okay, that would tell you that the fund has been flat. Well, when you're dealing with a huge dividend stock like ULTY, and you can say that you have a flat piece, well, it's probably time to jump in and start harvesting dividends. The trailing low is $6.10. Okay, what that means is the stock normally, if it falls down to the trailing low, which would be $6.10, and stops there and turns around and comes back. Everyone that comes into this says the value of the stock is more than 610, so we're going to bump it up. So when we take a look at the dividend return of ULTY, you can see now there's something I do have to clarify with you on this, is when it switched to the weekly pay, which is right around that March of 2025. It switched to that weekly pay, and you can see it's been fairly flat across the board, paying basically 9.5 cents per share per week. So when I look at this and say, is this what you want to see in a dividend report? The first answer is your stock is flat. So now your dividend comes in flat, but it's coming in at 9.5 cents. You do the math at something that only costs you $6.28 a share. about 60 months into this, 60 weeks into this, you're going to have all your money back just from dividends alone. So just a hair over a year, and you'll have all your money back in from dividends plus possible growth of the stock. So this is why we say we like that a stock goes flat, and then we see the dividends have fairly gone to what we call flat but steady. And so it's a positive on both sides of the fence. So what we did here is we put this into a computer generated income program that basically if we invested $10,000 into ULTY a year ago, where would we be sitting? And this is where the fans of the YieldMax NAV killer comes into play. If we bought this in July of 2024, we would have paid $13.82 a share. We would have bought 723 shares. A year later, our value of our stock would be down to $4,544. So we would have lost $5,455 or 54% of our fund in NAV erosion. We would have gained $8.32 total. Now, I want to be clarified because every one of the weeks we're paying, the spreadsheet would go on and on and on. So we kind of just tallied it all up. But we collected $8.32 worth of dividends, which gave us $6,000 of income in 12 months or a 60% return. So basically what it comes out to be is even if we bought this back in July, we would now have covered ourselves. We would be back to square one, and we would have made $564 or 5.64% on this fund. Am I excited about those numbers? No. Am I excited about the 60%, which is below the 70 that they're advertising? I would accept that very comfortably, but it's taking everything I got to roll it back into fixing my virtually investment, getting back to my stock value. So this is not one of those things that we say, hey, invest in, this is going to be a great stock. But why do we make a change? And why do we say now's the time to start buying? If you take a look at this and back this up only to April of this year, you can see the stock price hit a $5.76 price point, which would have been able to buy with 10,736 shares. The price has slowly creeped up over month. And this is what we're seeing and why we get excited about this. We are seeing this month after month. We're starting to see not huge changes, not huge gains. We're picking up pennies, guys. We're picking up pennies. 4 cents, 5 cents per month. But look at the difference in the numbers when we get down to this. In 4 months, we have picked up $902 or 9% of our initial $10,000 investment. We would have picked up $2,200, almost $2,300 in 4 months for a 23% dividend return. That would give us a 31% total stock return in only 4 months. This is why we started saying, let's watch this, let's stay on top of this. Maybe we need to look at this a little more detailed, and we have. So is it time to buy ULT? I believe it is. And I put on there $6.20 or lower. Because when we look at the averages, as I told you before, $6.20 or 24 cents for the 90-day, $6.20 for 30-day, our trailing low of $6.10 and the current price of $6.28, you're falling right into that prime area. Would I like to see this thing drop and get back down to that $6.20 range? Sure we would. We always like to buy things on sale. But I don't see this being a bad buy at $6.28, especially when you're getting that 9.5 cents of dividend each and every week. So is ULT good for a retirement account? And the answer is definitely, I think it is right now, definitely. Because when you look at the 4-month dividend of 22.91% and an estimated 85% if you bought it now, you're in a shining point. 9% gain in only 4 months if you bought now. Okay, buying in the target range will reduce what the need, the more time you to know. It's a hard thing to say, but what I'm basically trying to tell you is If you're watching the stock like we are and you know what's going on with the highs, the lows, and the minimums, you know where to buy it at. And right now, I think if you're buying in that $6.28 and below, you can't go wrong with it with ULTY right now. So that's why we moved it to a moderate buy. And I believe it's one of these things that you could buy in a retirement account, sit back and collect your dividends and enjoy and not have to worry too much about it. Especially if you're watching this channel, we're always constantly giving you an update on ULTY. Guys, it's Doug the Retirement Guy. I hope you like the information we're giving you. Give us a thumbs up. If you're not a subscriber, you're missing out. Hit that subscribe button. And if you have any comments, leave them below. We always love to hear what our crowd and what our fans are talking about. Everything helps the channel, and we'll catch you next time.